information provided is for educational purposes only. Opinions presented during this show are those of Justin Fort and or his guests. It is not intended to be specific advice for any particular individual. A decision to execute any financial strategy, investment, or purchase any financial product should be made carefully after a thorough review and evaluation of recommendations and consultation with your investment advisor, representative, and or other tax or legal professional. Investment advisory services are offered through AlphaStar Capital Management, LLC, an SEC-registered investment advisor. Fort Wealth Management and AlphaStar Capital Management are separate entities. You've been looking forward to the next phase of life. Maybe that's traditional retirement. Maybe it's just another phase in your journey. Either way, you've worked and planned and saved for this time. You've earned it, but you have questions. Will your money last? What if you're in the wrong investments? What about health insurance? And what if you need extra care later on? You sure don't want to depend on the government. Welcome to Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way, all the way. Now, here's your host, Justin Fort.
This is Talk 1370. You're listening to Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way, all the way. I'm Justin, and I'm here in studio with my sidekick, Jennifer. Good afternoon. And call us live at 512-390-1370, or send us your emails, comments, questions to ask@fortwm.com. And we have an amazing show planned for you today. We're going to be talking with Bob Rinear, and he's an expert in this area, talking about finance, economics, banking, and politics. With numerous world events taking place on a regular basis, you may be impacted in more ways than you realize. And is it possible that those involved in these events are in control of swaying financial markets and even nations? What does all this have to do with you and the kind of life your kids and grandkids will live? Today, Bob Rinear explains how knowledge of the interweaving of world events can give you a greater advantage in the financial markets. So we're pretty excited to have Bob Rinear on today with us. But first, before we get to Bob, just wanted to talk about the old adage. You've probably heard it before. The only thing that's constant in life is change. And I really believe that to be true. As a financial planner, I work with clients to try to peer into the future, put together a plan that's going to take into account all of the different possibilities that they're facing, and all of the different risks and government regulations, tax changes, pricing, inflation. And, of course, we want to look to the past as an indicator, but you've all read those prospectuses before where it says that, the investment that you're considering, the past performance doesn't really apply to the future. You can't rely on that. You've heard that before. And really that's true because the world's always changing. So the events that took place over the past 20 years, from a micro level to a macro level, micro meaning your personal situation, your family, maybe you're raising children, maybe you were helping them get through college, and of course that's expensive, and all of the different things that challenged you throughout your career. Maybe it was changing careers, maybe it was dealing with illnesses and things of this nature, and striving to save for this retirement phase of life. Those things that happened over the last 20 years, they're different challenges than what you're going to be facing over the next 20 years. And there's going to be a different environment, legal environment, tax environment, economic environment that we're going to be facing over the next 20 years. And none of us have a crystal ball. I know I don't. None of us knows the future for sure. So what we try to do is we try to make our best guesses. We try to make an informed, educated guess as to where things are going, and so that we can properly develop a plan that's flexible so you can make changes. We can make changes to that plan, but we want to have a really good foundation based on the science and the evidence. And we do use the past, but we also want to look at what academia tells us, what research and statistics tell us. And, so this last week I was fortunate enough to attend a 4-day residency for my master's degree in financial planning, where I got to meet with PhD professors, one of which we've had on our previous show, Dr. Fow, and other professors there at the American College in Bryn Mawr, Pennsylvania, and talk about those things that you're facing as the future looms, the unknown future looms. What are those things that you might be wanting to consider, and how, as planners, how can we help you put together your plan so that you're best prepared for the unknowns that may come? And I was sitting with about 23 other students, and all of them, successful, interested in being self-educated, really good people that cared a lot about their clients. Some of them have worked in the industry for about 35 years. Some of them worked for large name brand companies. Maybe they were captive to those companies. And some of them were independent like myself. And we got to do some round robins where we talked about things that mattered to us and things that we did for our clients to achieve their goals, and the things that we were concerned about, all of us knowing the science and the evidence and the statistics. It was very interesting to see the biases and the assumptions that people brought to the table. And I found that for those advisors, planners, if you will, that were captive to a broker or an insurance company, I don't want to say that they were necessarily drinking the Kool-Aid, but there was definitely a bias towards the products that their particular firm offered, and it makes a lot of sense. Of course, they're going to be very familiar with those products and those strategies, and how to apply those to the things that their clients are facing to best put together plans, and trying their best. They really had a good intention. But I was able to see that as an independent individual, and that's the way we run Fort Wealth Management, my personal practice that I work during the week here in Austin. I get to pick and choose from the various options and investments and insurance products and solutions that are available that are the best for my clients. And so I was very interested to see what all of these other students were doing, so that I could pick those gems and those diamonds in the rough, if you will, that they're using, and then actually implement that in my business, in my quest to ever improve the services and offerings that we provide at Fort Wealth Management, so that we can achieve our fiduciary duty and maintain our independence. That was very important, and is still important to me, always important. So being able to attend this event in Bryn Mawr, Pennsylvania, was very enlightening and an affirmation to me and the services that we provide at Fort Wealth Management. And so the takeaway really is, you have to understand your personal situation. That's the micro. You have to understand where your money is, how it's invested, how much risk you're taking in the market, how much risk you're not taking in the market. Do you have too much money in assets that are underperforming? Are you paying more in fees than you should be? You have to understand your own situation. Are you dealing with health issues? Do you have a dependent still that's going to remain a dependent for the rest of your life? Do you have your estate plan, your will properly designed and written? That's the micro. If we don't have that, who cares about the macro, right? It doesn't really profit you to worry so much about what Russia's doing and what China's doing if you don't understand what you're doing. So, of course, it's important to understand the macro events that are shaping our environment and may have a massive impact, and will have a massive impact on the next 20 years, this retirement journey that you're facing. We have to know that. So we have to really focus on both the micro and the macro. And that's why I'm really excited to have Bob Rinear here on this show today to talk to us about some of those things in finance, economics, and banking and politics that are going to really be things that we want to consider when we develop financial plans, and the things that you want to consider when you consider how you want to have your money positioned, how you want to have your plan written, if you will, or augmented to best handle this changing world that we all live in. So when we get back, we're gonna have Bob Rinear back, who will speak to us about his newsletter, his research, and some of the really interesting things that he's found throughout the decades of his work. And so this is Justin Fort. The show is Retirement Journey, and where it's all about the health, wealth, and freedom you need to live life your way all the way. And this is Talk 1370. Talk 1370. You're listening to Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way, all the way. I'm Justin, and I'm here in studio with my sidekick, Jennifer. Hey, Jennifer.
Hello.
And you can call us live at 512-390-1370 or send us your questions, comments in email format to ask@fortwm.com. We really will read them, and we're happy to visit with you if you'd like to give us a call. And you can meet with us at our office if you like. 512-433-6492 is our office number. And you can visit us at our website at fortwm.com and schedule a time to visit with me if you like. I would be more than happy to sit down with you and to take a look at your retirement plan. If you have one written, if you don't, we can help you write one. And we can show you the best practices in the science of financial planning and talk to you a little bit more about our philosophies. And anyways, we're back, and we are excited to visit with Bob Rinear today. And Bob, welcome.
Hey, Justin. Hi, Jennifer. Thanks for having me on.
Good. It's great to have you. Bob, can you tell us a little bit about your background and a little bit about yourself?
Yeah, I didn't get into the financial game like most people did. I started life as a jeweler. I actually owned a few jewelry stores and went to school to be a jeweler, and it was through the jewelry business that I got my first education that I really didn't understand a thing about financial planning or global finances, and that hit me like a ton of bricks, and I decided to change that and try and learn all I could. And over the years, that just kind of morphed into a different career path for me. And for the last 20 years, I've been involved in this money game, if you would call it that.
Yeah, and I've read a little bit about your work and listened to some of the radio spots that you've had in the past, and really enjoyed what I've seen. Now, in the 80s, you saw obviously gold soaring, and you wanted to know why.
Right. That was the biggest thing. When you're in the jewelry business, one of your biggest concerns is constantly restocking your jewelry shelves, if you would. Anytime you sell something, you need to replace it. And the price of a gold chain or a gold line, it would change so radically. Almost day by day, and I called the supplier and I said, "Why? How come this chain I could buy it from yesterday for $300 and today it's $400? What's up with that?" And they would tell me about, gold went up. Well, why did gold go up? Well, gold went up because of some event overseas. And I'm going, what? None of it really made any sense to me, and I had to come to the realization, hey, dummy, you better learn something about what really moves markets. And that kicked me out on the financial streets to go knocking on doors and trying to learn exactly how does this all work. Well, the interesting part was I went to school and, I took my economics courses and I talked to my professors, and they had the whole textbook thing down pat. It all made a lot of sense, except it didn't seem to jive with what was going on in the real economy. And that's when I decided, you know what, I'm going to have to come up with my own idea, my own theory of how this all fits together, how all of this works. And when I did that, things started to make a little bit of sense to me. I started making good investments. I started making some money in the markets. And, boy, I'll tell you, Justin, it doesn't take long. If you're doing something right in the markets, pretty soon your phone's ringing. Hey, what are you doing over there? And that's what launched my little company and keeps us in business today.
Well, that's great. And it sounds like you had a personal drive to figure out why and to ask the question why. And I found that many of the successful clients that I've met with and successful people that I meet with every year, when I get to go to conferences, I get to visit with people that are quite successful. I've found that there's a theme, and the theme is they ask questions and they want to know why, and they're curious to know why, and they're not going to sit there and accept the fact that, like you said, that today and it's $100 more expensive than yesterday for the same gold chain or gold watch or whatever it was that you were trying to stock your store with. You wanted to know that there was a reason behind that, and it wasn't just, number one, them just deciding to charge you more.
Yeah,
right?
they didn't just jack the rate up overnight on me. Exactly.
Right, and they were dealing with prices themselves, and there was a larger world out there that impacted the pricing of the goods that you depended on to stock your inventories for your business.
No question. And that was exactly the key, was that we come to find that so many things, the entire world is interconnected. And it's that the old adage of the butterfly flaps its wings somewhere, and ultimately you get a hurricane around the other side of the globe. In a lot of ways, it really is like that. Very little events that can take place in the Middle East or Asia, Japan, Russia, wherever, do indeed end up, affecting the guy in Austin, Texas, after ripples through the system. And it's very interesting to see how all that plays out.
It's interesting what you say is exactly, you learn this by doing the research into the real world, if you will. And I think that's probably one of the best ways to figure this stuff out. But I do remember, I went to school for finance here at the University of Texas at Austin, the McCombs Business School. And I remember taking some courses where we talked about how the economy and other things that most people think drive stock market pricing have less and less to do with stock market pricing nowadays, because there's so many participants in the market. We actually called them what we call the F factor, or the factor of the quote unquote uninformed investor that can make trades, in their pajamas at night on the internet through their whether it's a Schwab account or Fidelity or TD or something like that. And they can actually have a massive impact on the pricing of stocks and other things like metals, and it has less and less to do with the fundamentals behind the supply and the demand, or the fundamentals of the balance sheet of the particular company whose stock price stock they're trading, and a lot of it has to do with emotion and how maybe the media frames things and how people view the world, regardless of whether or not that view is really in line with reality. Yeah.
And so many things affect, if you just want to say a stock price or an equity price. Years ago, when I first started, say the early 90s, when I started, my journey into economics, that's what I was saying. I was reading the textbooks, I was listening to the professor, but it still wasn't lining up with exactly what was going on in the real world. And if you notice the changes, if you go back those 20 years and you start noticing the changes in the way that the entire financial industry moves, how it operates, back then it was really pretty rare for a company to do a stock buyback. And yet in February of this year, they did $100 billion worth of them. And in fact, just on Friday alone, General Electric announced they were going to do a $50 billion buyback. Now, those kind of announcements, those kind of actions, that will move stock prices. But yet you have to question, well, is that organic growth? I mean, is that a fundamental? Because the company itself has decided we're not going to expand our plants, we're not going to hire people, we're just going to buy back our own stock. So the industry has changed an awful lot over the last 20 years. And if you don't keep up with the things that have changed so that you can understand why some of these things are happening, you get kind of left in the dust. So we try our best to really keep a pulse of what's going on.
Yeah, I completely agree with the insight that you have on the buyback issue, because that is definitely something that in the articles and the educational materials that I've learned throughout my educational experience and the things that I read today, what it says to a lot of investors when the company buys back stock is it says that, hey, you know what, we've got nothing else better to do with this money, and so we're just going to give it back to you. And that's a great thing. In some cases, a lot of activist investors want money to be sent back because they want to get in and get out. But long-term returns, do you want to own that stock for the long haul? What does a buyback really mean? And, of course, it always depends on the perception of the investors, doesn't it? It depends on how people view a buyback, whether it's an opportunity or whether it's just another thing that shows that company has nothing else to invest in, and so therefore maybe their future isn't as bright or their growth isn't going to be as high as what analysts expected. So definitely the perceptions come into play. And Bob, we're going to have to go to break here, but I'm really excited to delve a little bit more into the research you've done and the facts that you figured out for yourself.
Sure.
And we're going to be back in just a minute. And remember, you can call us at 512-390-1370 or send us your questions and comments to ask@fortwm.com. And this is Justin Fort. The show is Retirement Journey, and you're listening to Talk 1370. Talk 1370. You're listening to Retirement Journey with Justin Fort. You can call us live at 512-390-1370 or send us your questions, comments to ask@fortwm.com. And we're visiting with Bob Rinear. We're talking about finance, economics, banking, and politics. And we're talking about how those things can impact you and your retirement future, because this is Retirement Journey, where it's all about your retirement journey, your future. We want to know the things that you need to know. We want you to know those things as well. And we would, of course, love for you to come into our office. I'd love for you to visit with me personally. You can do that. You can give us a call at 512-433-6492. You can visit us at fortwm.com. We also do have seminars that we do run throughout the months. And we've got some topics, Social Security, retirement planning, and we'd love for you to get involved with some of those. We'd love to have you. We're gonna tell you more about that towards the end of the show. We're back, Bob, and I wanted to ask you a quick question about the oil crash. Why do you believe that oil crashed, went from $115 to $45 per barrel, when really everybody believed that oil was just going to continue to go up and up, and we were never going to see a reprieve?
Right. Well, that's where the whole concept of geopolitics and what goes on around the world ends up affecting you in your own hometown. So generally, we've had quite a bit of oil come to the market over the last 10 years. And during that new discovery, if you would, the shale oils, the Canadian tar sands, the fracking oil, the Permian Basin, different discoveries around the world, a lot of oil has been found and brought to market. And at the very same time, because of things like much greater efficiency out of cars, and the average car today, they advertise 38 miles to the gallon on relatively bigger cars than years ago. You'd have to be in a box, a motorcycle, to get that. So we've had a lot of efficiency improvements on one side. We've had a lot of oil come to the market on the other side. Now, that's the fundamentals of it, basic supply and demand. There's a bit more supply than there is demand. Well, that's happened for a long, long time. And what used to happen in that situation was the OPEC nations, led by Saudi Arabia, they would look at this situation and go, hey, we're going to have to cut back on some production here. We got to take some of this oil off the market so that we can get the price back up. And this time around, they didn't do that. In fact, they said flat out, nope, we're going to continue to produce, and we're going to let the market figure it out. Now, that's an epic change of thought. And the reasons behind why they've done that, that's kind of like where you have to allow yourself to put on your little conspiracy hat and say, okay, what's that about? Like, why would they be willing to drive the price of oil lower? And it really does have a lot to do with Russia. It has a lot to do with the Ukraine. It has a lot to do with Iran and their political stance against these different countries. Basically, they're using oil as a tool to beat up Russia.
Yeah, and this shouldn't be surprising to us. There's nothing wrong with putting on a little, how'd you say, conspiracy hat. There's nothing wrong with that. You know, we should question and things that we don't understand, and that's how we learn, right?
Well,
and
the problem is, Justin, that sometimes I'll be talking to a gent, maybe like yourself, and I'll say something like that, and they'll kind of give me a little dig, like, wow, that sounds a little tinfoil for me. Well, it's not. Like, the world is a big place now, and it's all interconnected more than it ever has been in history. And it really is true that, we'd like to think that everything is unicorns and kittens, but there's some really bad things out there and some bad people in this world, and they can do things that are pretty evil. And in that particular situation, the Saudis have their own issues with the Iranians and the Syrians. They have a big problem with that. And they know that the Russians are very buddy-buddy with the Syrians. So what they were figuring is, well, Putin takes in the bulk of his money by selling energy, by selling oil. In fact, it's almost 70% of their country's revenues is oil and gas. So if they figured if we turn the screws hard enough and tighten them valves to where the price just keeps falling as far as flooding the market with the product, maybe he won't be so buddy-buddy with Syria, and then they have their chance to start building their pipelines up through southern Europe. That's what it's really about.
Right. Every country's got its own interests. And, that brings me into another question I wanted to ask you, actually, was, the United States established diplomatic relations with the Ukraine back in 1991, and following its independence from the Soviet Union. Do you think that the Ukraine is an issue for the U.S. today? And what are your thoughts on that?
I think it's a massive issue, and boy, this is where I don't know. I don't want to get darts thrown at me from your people or get you darts, but the Russians didn't instigate the Ukraine situation. We instigated that, and it's the same thing. It's geopolitical gamesmanship as they try and move the political hot potato around the nation. Okay, what serves the U.S. interest? Well, it serves the U.S. interest to remain the world reserve currency. And they've been watching the Russians advance. They've been watching the Chinese advance. The BRICS nations, Brazil and Russia, India, China, South Africa, have been growing in importance. Their currencies have become more important, and the United States is literally freaking out about that.
Bob, there's no way, I'm being sarcastic, there's no way that we could possibly be bad actors because we're the United States, right?
Yeah.
We're the free world, we're the good people, and we'd like to believe that, but of course we do make mistakes. Now, if you're just tuning in, you're listening to The Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way, all the way. And I'm Justin, and we're speaking with Bob Rinear. He's the editor at investyourself.com, and we're talking about the issues, global issues that can impact your life directly, and how we can better understand the things that happen in our micro lives that are actually happening because of these global events. And Bob, before I cut you off there, you were talking about the influences of the United States in these other regions, and how our interests, every country essentially is trying to do what's best for its people. And sometimes it's not so well calculated or figured out ahead of time. But we need to kind of understand what's going on from an objective standpoint and try to remove ourselves from this subjective Kool-Aid environment, if you will, right?
Well, I think what people need to do is they have to realize that these big players on the stage, the things that they do in fact affect them. Just like we said, oil fell almost $70 a barrel. It didn't fall for any reason other than the fact that somebody wanted it to fall. So think of the impact of that. And we've got oil fields laying people off. We've got a lot of derivatives that were written against oil reserves and a stable oil price that are going up, puffs and smoke. So these type of things do indeed affect people greatly. And when you look at the tinderbox that the Middle East, the Ukraine, Russia, China, BRICS, all of that, really is a very tense situation. And probably the biggest reason right now is that China is desperate, to get their currency, the renminbi, which we usually just call the yuan. They're desperate to get that included in the IMF's SDR package. Right now, the SDRs, it's kind of like another type of a reserve currency that the IMF releases. There's 4 major components in that. There's the United States dollar and the British pound and the Japanese yen. And the Chinese want in that real bad. They think that, hey, we're a big economy. We need a little more respect. And they're trying to get the yuan into that. And the next meeting is this September, October. And they're going to push real hard to have that happen. Well, every time the Chinese try and exert their influence on the global stage when it comes to their currency, it kind of bothers the U.S. I mean, the U.S. has been the reserve currency of the world for the last 65 years, and they do not want that to change. So you get some of the saber rattling and head-butting. But this is important stuff because for the Chinese to move up the economic ladder, not everybody can be at the very top. Somebody else has to move down a rung, and the U.S. doesn't want any part of that.
Yeah, and to bring this back to kind of the micro level again, for our listeners, why does currency manipulation, currency issues, why do you feel like that matters to the individual out there?
Well, look at, you deal with a lot of retirement-aged people, and a lot of these people remember when they used to go down and they'd open a CD or they'd just put their money in an old passbook account, and they'd get 5.5 or 6 or times 7% on their money. And that was kind of a norm. It was kind of almost a standard. If you look back over 50 years, you see, a low of like 3.5 to 4%, a high of 7-8%. Occasionally it'd swing out of that bracket, but that was pretty normal. And now for the last 6 years, you go put your money in the bank and they're paying you 1/2 of 1%. Okay, so you say to yourself, there's an exact example of the impact at the personal level of something being manipulated. Interest rates do not stay at 0% for 6 years on their own. The Federal Reserve has made that happen. And what happens, of course, is the people that were real serious savers and enjoyed putting their money in the bank and getting their 5%, they're stuck. They're not getting any return. So what do? A lot of them end up being almost forced into buying equities.
Oh, you're totally speaking the truth there. I mean, I see that all the time. That's a major question, and we do try to implement strategies and solutions to lessen the impact of these low interest rates that we're seeing and the volatility of the market, and that's definitely something that I think every financial planner that cares about their clients should be addressing with their clients, and not just saying, well, I guess you just have to own all equities. I guess you just have to deal with earning no money. That's your lot in life, and good luck to you, sir. I think I know there's alternatives to that. I know there's best planning practices, and there is a lot of research and things going on in the academic world that I stay abreast with, as well as in the market of financial tools that are available, products that are available through insurance companies, brokerages, and investment firms throughout the country to address those things. And that's one thing that we really try our best at Fort Wealth Management to help people understand what their options are. We want them to understand the pros and cons to different investment choices, or tools, I call them, tool choices, inside their retirement plan. But first and foremost, we have to have a plan, and we have to understand the world market and the world, the politics of these foreign countries that now have a direct influence over our micro world here in the United States, because we're a global economy. And we're going to be back here. And I want to talk to you, Bob, here in a little bit more about how some people disagree with jobs market, the strength of the jobs market, and what they're being told, and whether or not they're right, and how this impacts the stock market. So when we get back, we'll talk more about that and some other really interesting things that you're going to want to stay tuned to hear more about. And again, the show is Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way, all the way. And this is Talk 1370. Talk 1370. You're listening to Retirement Journey with Justin Fort. You can call us live at 512-390-1370 or send us questions, comments to ask@fortwm.com. We're visiting with Bob Rinear, the editor at investyourself.com. We're talking about world events that really have impact on you and our clients as well, and we want to learn as much as we can, and so we're really excited to have Bob with us. And Bob, before we went to break, I had a question that I wanted to have you address, and that is that some people out there may disagree that the jobs market is as strong as they're being told. We listen to the news and we hear the talking heads out there telling us that it's this way or it's that way, and of course, sometimes we're left scratching our heads, and some of us just don't believe any of it. Is that person right about that, or just is that hard on their luck?
Our official jobs reports and our official unemployment report is a Nobel Prize winning work of fiction. Okay, it is just if you're a fiction writer, you've got nothing up against these guys. They're the best at it. No, the numbers are completely fake. And the reason people push back and say these numbers can't be right is because they know they can't get a job. They're working 2 part-time jobs and still not making ends meet. But the fact of the matter is that they put out numbers that are now so, what's the word? I guess doctored up is just as good as any other word. Fraudulent's a better word, but
or maybe they're just missing data, or there's difficulty in collecting everything, and sometimes
not really. Like, look at the BLS birth-death situation. Now, a lot of your listeners aren't going to know what that is, but to give you a quick idea, the BLS, who makes up the unemployment numbers and tells us about every month how many jobs there were, they have something called a birth-death model. And in its basics, they say that, well, for every business that goes out of business, some amount of those people that lost their job will go out and open another business and hire people. Now, there's no proof of these people. There's no tax receipts or anything, but they just take a guess, and they They come up with a number and they say, boom, this many more people showed up in the jobs report. Well, in this last jobs report, just last week's, they say 72,000 people showed up on the payrolls through this birth-death model. Of course they didn't. They just made this number up. And so when you look at a number that was already horrifically weak versus the estimates, and then you look at the BLS, and they added 72,000 just to get to that, people should perk their ears up and go, huh? Because it's a lie.
Well, it reminds me of, I had a course years ago called The Theory of Knowledge, and it had to do with trying to understand why we know things or why we think we know things, and the empirical evidence and how empirical evidence can be framed. And there's a saying about statistics that if you want to know or have something prove your point, you just pick the statistical evidence that supports your point, and there's plenty of evidence that doesn't support your point. And that's definitely difficult, and that's also frustrating, I know, for people that I meet with when they're trying to get real sound advice and kind of understand what's going on. There is definitely an ocean of bias out there. There's an ocean of special interests, and this entity or this person wants you to know this thing, and there's so many opposing views, and you really kind of have to dig a little bit deeper to really get at the core of what really matters, and as much of the quote-unquote truth as may exist. So, I agree with you. I'm not sure how much is nefarious. I'm not sure how much is just mistake. I'm not sure how much is just misunderstanding or framing. And it's very difficult to look at a newscast or news outlet and say, well, they're to blame, because really what they're doing is they're picking up from some other sources somewhere, and whether or not they check their sources, right? Who knows?
That's the important part, is that when you tell people something on the public airwaves, like you do, or through newsletters like I do, this, that, and the other thing, you had better be able to document what you're telling people, because I think if you can't, you're just another blowhard. You're just part of the problem. So I won't ever put anything out that I can't really point to a website, a documentation, or this, that, and the other thing. But the fact of the matter is, in the employment situation especially, over the years, they have changed the way that it is recorded. They've changed the way people are noted as being employed or unemployed. They have created the birth-death model. So whether you call that manipulation or just creative finance, I'm not sure, but they consistently make it to look better than it really is. And every guy on the street knows it's not as good as they tell us.
Yeah, and I'm a big proponent of relying on research. That's exactly what we do at Fort Wealth Management. When I visit with my clients and I give them recommendations for something, I'm implementing the science. There is a scientific element to finance. There's math, right? You can't argue with math in many cases, and there is science to financial planning. But of course, as we move forward and outward away from that, we get into the area of subjectivity, where all financial planners can be biased and all individuals can be biased. And it's important to remember that we can be such, and we are subjective beings, and we have to be as able as much as we can. We have to focus on the trunk of the tree, the base or the roots of where we're getting our ideas, and always question even the way we think. So, Bob, it's been exciting and very informative to have you on the show today, and I'd love for you to come back. So can you tell us how we can get your newsletter?
Well, thanks, Justin. First, let me apologize. I don't know why my handset's beeping at me like the battery's dying, but it is. I'm sorry about that.
Well, you sound good to us, so I think you're good.
All right, appreciate it. Yeah, I do appreciate that very much. My site is investyourself.com, and I do offer a completely free newsletter. I don't want your credit card. I don't want your ID. Just pop your email address in the box, get on the rotation, and drive us around for a while. See what you think. We're a little controversial, no doubt, but if you stick around long enough, you generally see that we're not as crazy as it sounds at first.
Well, good. Thank you so much again, Bob, and we're more than happy to have you on the show. We look forward to having you out again.
Justin and Jennifer, thanks so much. Take care, guys.
All right.
Thank you.
Take care. Well, Jennifer, that was Bob. And very interesting conversation we had with Bob. I liked a lot of what he said.
I liked him.
You can never really agree with anyone completely on any one thing, but he made a lot of really good points.
I agree.
And I think that that's important for everyone.
Yes, definitely.
To be aware of. Yeah. So we are going to be talking about some interesting facts. We've got tax season right at our door. So if you haven't done your taxes yet, you probably have a little itching in the back of your head, a little burning in your wallet. You know that you've got to get some things done. And so hopefully you haven't left it to the last minute. But if you have, we're going to be talking a little bit about some things that you might be interested in doing. And, we did talk about earlier on in the show how times have changed, and I just wanted to mention a couple things with respect to what things look like 20 years ago. 20 years from now, that's what we care about as what I care about as a retirement planner with my clients. We're trying to forecast the future. Well, sometimes it's good to look in the past, and this is actually from the peoplehistory.com, kind of an interesting website where we can find that in 1995, if you remember back then, didn't seem like it was that long ago, the year-end close for the Dow Jones Industrial Average was 5117, and in 2014, according to the same website, the Dow Jones was 17,280, so pretty big change there. And what was really pretty interesting, and many of you, you may be aware of this, but average cost of new home in 1995 was $113,000. You know what it is today?
No.
Can you guess, Jennifer?
Oh gosh, I don't know.
More than $113,000.
Well, obviously.
Actually, it was $420,000.
Wow.
That's the average for new house buy. That actually surprised me. I think we're really blessed to live in Texas.
Definitely.
We have great standard of living. We've got phenomenal home values, and I know when I speak with people from California, from the Northeast, they're really jealous of the homes that they say, well, of course I could have a mansion in Texas, right?
Yes.
So we have a lot going on here in Texas, but times have definitely changed. And we would expect that times are going to continue to change, and we need to be prepared for this future. We need to make sure that we have a plan in place that protects us from all the variety of different changes that could happen within reality, within reason, right? And we do rely on the past to give us an inkling into what the future may hold. Of course, we don't know, but if you don't have a plan, if you don't know what you're doing, if you don't know what you own and what risk you're taking, then you may not fare as well as those that do know. And again, this is Retirement Journey. Justin Fort, you're listening to Talk 1370. Talk 1370. You're listening to Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way, all the way. And you can send us questions at ask@fortwm.com or call us live at 512-390-1370. It's tax time, and if you haven't done your taxes yet, you've got some things to take care of. Of course, hopefully you're meeting with a competent tax professional and getting that done the right way. I had a couple come into my office recently that asked me whether or not they should be using a Roth or an IRA. And, that's a good question. And I need to know a little bit more information. And I looked at him, I said, I asked him, well, do you participate in an employer plan? And he said he did. We'll call him John. And, of course, not his real name. And so John said he did participate, and he was actually saving his 401k. He has an IRA. His wife has a Roth and an IRA, and they were wondering whether or not they should add to those. And the next question, I needed to know, I asked them, what is your adjusted gross income and your net income taxable amount, and we found that they were actually above the limit. It's really important to check out irs.gov, check out the tables there, find out what you can do to lessen the tax blow. And remember, we're at historically low tax levels. And if you need help with how to position your assets and take full advantage of the tax environment we have today, whether it's Roth conversions or just simply adding to retirement accounts, feel free to call us at 512-433-6492. You can visit with me personally. I'll be more than happy to sit down with you and take a look at what you've got going on. Now, Jennifer, can you tell us a little bit about seminars coming up?
Yeah, we have a Social Security seminar at Mandola's Restaurant on April the 21st and 23rd. It's going to be a great evening where Justin talks about strategies on how to maximize your Social Security benefits, how to coordinate your employer retirement plan with other sources of retirement income, and more. So you're not only leaving with a full belly, but you'll also be leaving with more knowledge. We would love to meet with you. So to RSVP, call 1-800-769-1614, or you can go to the events tab on our website at fortwm.com. Now remember, you can always call our office to set up a meeting with Justin. That number is 512-433-6492. And then next week, our topic next week, everyone loves a rags to riches story. A part of the allure is imaging that it could happen to you. Well, it can, says author and entrepreneur Jay Massey. With humor and passion, Jay shares his inspiring story of overcoming life-threatening illnesses, squatting in a foreclosed home, to amassing a huge real estate portfolio. Stay tuned to hear Jay teach you how to accumulate cash flow and create wealth in any economy.
We wanted to thank our guest, Bob Rinear, and the producer we have, Matt Alvarez. Thank you so much, Matt. And thank you to our sponsors. And for you, listeners, we're thankful for you and you being there. We're excited to see you next week. That's 12:30. Feel free to tell your friends about the show. You can find us on Facebook, visit our website, get in contact with us, and take control of your retirement, because it's all about you. It's all about the health, wealth, and freedom you need to live life your way all the way. This is The Retirement Journey. Justin Fort, Talk 1370.